A very good morning, everyone, and thank you for joining. My name is Rona Bichu, and I'll be your host for today's webinar on the topic VAT impact on transportation and logistics sector. Before we dive right into the webinar, I would like to give a brief introduction about our company. ITC, Accounting and Tax Consultancy, is one of the top and most reliable tax agency firms in the UAE. In a short span of time, our team mastered how to give clients the best tax solutions. You can expect an uncompromised attitude when it comes to quality and professionalism. We deliver a sleek and professional outcome that sets us apart from the competition. With the leadership of Mr. Ahmed Sharfuddin, we've already positioned ourselves as the VAT and excise tax specialist in the market. We have a fast-growing team of qualified and dedicated professionals with innovative and commercial approaches to meet daily, highly challenging business environment. By bringing the best team at your service, highly experienced tax and finance specialists in the industry, ITC will continue to create long-term relationships with various businesses by having the ability to deliver an exceptional service that is satisfactory on all levels of quality and speed. As a testimony to our strategic and proven approach, most of the customers we serve are generated through referrals and repeated businesses. Moving on, I would like to give a brief introduction about our panelists for today's webinar. Mr. Huzaifa Abu Heba, Senior Tax Manager. He is a tax manager and an FTA-approved tax agent in the UAE. With a remarkable 10-year track record in accounting and taxation, he brings a wealth of expertise to various business sectors. His specialization lies in handling indirect taxes, including VAT and excise, while showcasing proficiency to streamline financial operations. Driven by self-motivated and ambitious nature, Huzaifa's dedication ensures seamless task delivery even in challenging situations, making him a reliable and efficient professional in his field. As a senior tax manager at ITC Dubai, Huzaifa plays a strategic role offering valuable tax advice and ensuring strict compliance with tax regulations for clients. His standing as an FTA-registered tax agent adds further credibility to his services. Huzaifa has continuously honed his abilities to deliver exceptional performance and solutions to the company. Next up is Mrs. Nikita Bhandari. Nikita is a seasoned tax professional with close to a decade of experience in a variety of tax-related fields. She has a well-rounded understanding of the industry and has honed her skills through years of hands-on experience. Expertise in tax advisory and pre-audits has made her a valuable asset to the team, as she is able to handle the most important cases and clients with utmost professionalism. Nikita is known for attention to detail and a strong work ethic. She takes pride in doing her homework and approaching every task with dedication to getting it right. Her approach has earned her the trust of clients and the respect of colleagues across all departments. She's a leader within the team and takes the time to mentor and teach her colleagues, helping to raise the overall level of knowledge and skills within the organization. With Nikita on the team, clients can rest assured that their tax needs will be handled with care and expertise. Now, I would like to hand over to Mr. Huzaifa to start off with the webinar.
Hello, hi everyone. I hope my voice is clear and you can hear me. So thank you so much for attending today's webinar. So thank you, Rona, for the nice presentation. So today, actually, we are having a very interesting topic. This is regarding the transportation and logistics industry in general. We have seen since the VAT implementation until now, there is update and the challenges regarding transportation sector, logistics sector. That's why we decided to have today's webinar to have some discussions regarding this topic. So first, we have this introduction, the definition of transportation, and what is international and domestic transportation. So transportation is simplified terms means the mode of transport. Transportation supports in navigating goods and passengers to the determined place at a scheduled time as per the customer requirements. The means of transportation are like buses, trains, aircraft, ships, boats, and etc. While the mode of transportation could be roadways and airway and sea as well. We have here summarized the categorization and the tax implications for each transportation type. So we'll start here with the local transportation. Actually, local transportation, if it's a local transportation for passengers, so it's exempted. And if it's local transportation for goods, it will be subject to 5% tax. Second category we have here, international transportation. So international transportation for passengers and goods, both are subject to zero rate. After that, we have the category of cargo transportation, and this should include the inbound transportation, outbound transportation, and cross-border transportation as well. And last, we have courier services, and this should include international courier services, domestic courier services, and cash on delivery service. So that was like a summary about what we are going to discuss in today's webinar. So moving to next slide, here there is like a flow chart for the logistics ecosystem. It's not necessary to be fully available in each company, but like this is like general flow chart about the logistics system. So we have in the logistics ecosystem, we have like shippers, we have consignor, we have consignee. Definitely ports are involved in this. Container operator, we have transport operator, we have NVOCC, we have third-party logistics. So these all are involved in the transportation process, and mostly logistics company are dealing with. Actually, for each one of those, it has some treatment and it has some tax implications, which we are going to discuss in the next slide. So moving to the next slide. So in these slides, we are going to discuss about like what is the law, UAE VAT law provisions. We are going to discuss in today's webinar. Can you please back to the law? Okay. So sorry for the technical issue. So today's we are going to discuss many of the tax law provisions, which is involved and part of the transportations, and which will be important for each transportation and logistics company to know. So first, we are going to start from the definitions. So in Article 1 in the Federal Decree Law number 8, the transport-related services. In this definition, the law have given definition what is the transport-related services. So it's about shipment, packing, and securing cargo, preparation of customs documents, container management, loading, unloading, storing, and moving of goods, and any other closely related services, and that is necessary to conduct the transportation services. So that was in Article 1 in definitions in the Federal Decree Law. In point number 2, we are going to discuss about the agent, and actually that was part of the done in the law, in the tax law. So earlier, the place of residence of the taxpayer was considered the location of the principal, but there is the recent amendment, the place of residence for the principal will be the residence of the agent. So based on this recent amendment, like each company having agreement with agents regarding transfer of goods, we need to review the tax implications for this. In the third articles here, we are going to talk about Article 30 of the Federal Decree Law. And in this article, the supply of transportation services, the place of supply of it. And this is very important criteria because, you know, we have like the taxability, the tax rate for the transportation, and also we have the place of supply. So when we are doing assessment for each transaction, we have to look to both of them. So in these articles, the place of supply shall be where transportation starts. And executive regulation of this decree law shall specify the place of supply for transportation services if the trip includes more than one stop. And moving to point number 4, we will be discussing regarding Article 22 of the executive regulation. And in this article, we will be talking about the place of supply So mainly the place of supply of transportation, it will be where the trip starts, and also the place of supply of the transport-related services is going to follow the same place of supply of transportation. So in this article, the place of supply of certain transport services are stated as follows. The place of supply of each transportation services is the place where the supply of that transportation service commences, and also where a trip includes more than one stop and consists of multiple supplies in accordance with clause 4 and 5 of this decision. The place of supply of transport-related services shall be the same as the place of supply of transportation services. Now moving to next slide. So we still here under the law provisions, which we are going to discuss in today's webinar in details. So we are here we will discuss the article number 44 of the Federal Decree Law. And in this article here, it's mainly is about the zero-rated transportation. So as per Article 45, the following transport service has zero-rated supply, and the international transport of passenger and goods which start or ends in the state. State here means UAE or passes through its territory, including also services related to such transport. So mainly in this article, we are talking about the tax rate for international transportation if the trip started from UAE or ended in UAE or even passed by UAE. Moving to the next article, we'll be also discussing Article 33, Clause 1 of the Executive Regulation, and this is mainly about the international transportation. So this is, this is giving more details about international transportation. So the supply of international transportation services for passengers and goods and transport-related services, and this point is very important, transport-related services, which we have mentioned in definitions article, shall be subject to the zero rate in the following cases. A, transporting passengers or goods from a place in the state to a place outside the state. And B, transporting passengers or goods from a place outside the state to a place in the state. C, transporting passengers from a place in the state to another place in the state by sea or air or land as part of a supply of an international transport of those passengers if either or both the first place of departure or the final place of destination is outside the state. So this is mainly one of the challenges now in the transportation market for those kind of like domestic transportation, which is part of the international trip, which we are going to discuss as well. And we are going to point number D, which is transporting goods from a place in the state to another place in the state if the services are supplied as part or for the purpose of the supply of service of transporting goods, either from a place in the state to a place outside the state or from a place outside the state to a place in the state. So this one will be discussed in details in the next slide. And the next article we will be talking about is Article 33, Clause 2 as well. And this one mainly is about the related services. So the following goods and services shall be zero rated if they are supplied in respect of the transportation services of passengers or goods, which either clause 1 of this article apply, which are treated as taking place outside the state. The goods which are supplied for use or consumption or sale by or on an aircraft or ship, it will be as well zero rated. And also B, the services supplied during the supply of transportation services, and C, the service of insuring or arranging of the insurance or the arranging of transport of passenger or goods. So mainly here, this is hitting the insurance companies for the insurance services, marine insurance, and all the kind of insurance for the transportation of goods and passengers. Moving to next slide. So here we will be discussing in more details the previous articles we have talking about. So first point we have here is the local transportations of goods. So the transportation of goods from one place to another within UAE constitutes local transportation of goods. Any domestic supply of goods in the UAE qualifies as taxable supply. And actually, the tax implication for this, for the local supply of transportation service would be subject to 5%. And here is the challenge, which is many companies are facing, how to differentiate between does the supply I'm giving, the transportation I'm giving, does it consider local supply or does it consider part of international trips? So here, FTA is looking into like, are you in charge of the whole supply, like from outside the state to inside the state, or from inside the state to outside, or you are only in charge of the domestic leg? Do you supply only the domestic part, for example, from the port to the customer location, or from customer location to support, and so on, or you are in charge of the whole freight? We have here one example we are giving. So there is like company and company B deal in transportation of goods, while both companies are situated in free zones. And this is also another important point, because mostly companies in free zones are considering themselves outside the state. So when it comes to service, some of them by mistake is applying zero rated. So in this example here, we are emphasizing the point that even the transportation between free zones are subject to 5% unless it's part of international trip. Moving to next slide. Okay, so in this slide, we are talking about international transportation services of goods and passengers. So here we are discussing what is the category, what is the points which is under Article 45 of the Federal Decree Law. So the below, the following services are related to transport services. It should be considered zero rated. First one is international transport of passengers and goods, which start or ends in the state or passes through its territory, including transport-related services. And in this one, there is a very important point. It should be highlighted. So the law talk about the international transportation, either start or end in UAE, will be subject to zero rated. But also we have to look to the place of supply. As we discussed earlier, the place of supply for transportation, and it will be where the trip starts. So regarding this place of supply, we need to look to the transaction. So if the transaction starts from outside to inside the UAE, so this will be considered out of scope. So the international transportation and related services for the trips which start from outside UAE to inside UAE, this will be considered out of scope based on the place of supply rule. And for the trips which start from inside UAE to outside UAE, it will be zero rated. Second point we have here is the supply of air and sea and land means of transport for the transportation of passengers and goods, as specified in the executive regulation. So here mainly the supply of boats and ships and aircraft, if it's used for commercial purposes, it will be subject to zero rated. Also the supply of train and buses, which has 10 passengers or more, it will be subject to zero rated. Next one is the supply of goods and services related to the supply of means of transport mentioned in point 2 in this article, and which are designated for the operation, repair, maintenance, or conversion of these means of transportation. So the supply of goods and also the services related to the means of those means of transportation will be subject to zero rated, and definitely it will be having some conditions. And next one is the supply of aircraft or vessels designated for rescue and assistance by air or sea will be also zero rated. And we have here supply goods and services related to the transfer of goods or passengers abroad by land or sea or means of transport. Which one to clause 2 and 3 of this article designated for consumption on board, or anything consumed by any means of transport, like any installation or addition, and also anything used during the transportation trip. So for this also, it should be subject to zero rate. Moving to next slide. Okay, so we're still here in the articles regarding international transportations, and here in Article 33 of Executive Regulation, and state the conditions of the zero-rated international transportation. And point number one here, transporting passengers or goods from a place in the state to a place outside the state. Point number two, transporting passengers or goods from a place outside the state to a place in the state. Point number three, transporting passengers from a place in the state to another place in the state by sea or air or land as part of a supply of international transport of those passengers, if either or both the first place of departure or the final place destination is outside the state. And number four here, transporting goods from a place in the state to another place in the state if the services are supplied as part or for the purpose of the supply service of transporting goods either from a place in the state to another place outside the state. And regarding these points, I would like to emphasize the point, yes, international transportation for goods and passengers are subject to zero rated. However, if you are supplying only the domestic part means the local transportation only, either from a free zone to mainland or mainland to free zone or from free zone to a free zone. This should be subject to 5%. We have seen these common mistakes happening a lot, but now it's the time to rectify this. Moving to next slide. Okay, so in this slide, we will be talking about cargo transportation. We will be discussing the inbound and outbound, and also the cross-border as well. First, let's talk about the cargo definitions. Actually, cargo, also known as a freight, refers to goods being transported from a place outside UAE or within UAE to a place outside UAE or within UAE. Originally, the term cargo referred to goods being loaded on board of a vessel. But these days, cargo is used for all types of goods transportation, including those carried by rail or van or truck or any other type of transportation. Okay, and now we are going to talk about inbound transportation. So inbound transportation services relates to the movement of goods from outside UAE to within UAE. So as we discussed earlier, regarding this, the tax implication, it should be subject to zero rated because it's international transportation. It starts from outside UAE and coming to inside UAE. However, we have here one example shows like the domestic part, which as we discussed, it should be 5%. So we have here ABC company. They have contract with shipping company. This shipping company rule is to take the goods from UAE port only and deliver it to the ABC company, which is either in mainland of UAE or a free zone. Regarding this one, this should not be considered as international transportation because for this service, the start point was inside UAE and the end point was in UAE as well. So this one should be taxable 5%. And here we have the documents which like the supplier of the service of transportation need to keep and maintain. One of it is the agreement, the contract of service, definitely the commercial invoice of the goods he is moving, proof of payment, custom declaration, bill of lading and airway bill, and also bill of entry and certificate of origin. This is the set of documents that the service provider of transportation we advise to keep to ensure compliance. Now moving to next slide. Okay, so now we are in point number B, and we will be discussing here the outbound transportation services. As name suggests, outbound refers to the outward movement of goods from the country. Outbound transportation services relating to the movement of goods from within UAE or free zone to outside UAE. And as we discussed earlier, this is considered as international transportation because it started from UAE and to outside UAE, and it should be subject to zero rated. However, we have here example shows when it can be considered as domestic supply only for transportation. Like we have here, there is a contract between ABC company with a shipping company to pick up the goods from the customer location and moving this to the port or the place where the goods will be taken to outside UAE. So if only your company provides this service, the domestic supply of transportation, like from inside UAE to inside UAE, because the free zone or the port is still considered inside UAE. So in this case, it will be subject to 5% and not zero rated. Here we are also having the set of documents which we advise the suppliers who are providing the transportation services to maintain to ensure compliance. We have here the agreement and contract of service. We have here the export documents issued by the local Emirates Customs. We have here department with respect to goods leaving the state, with payment, custom declaration, bill of lading, and airway bill. This set of documents we would advise to maintain it to ensure compliance. Moving to next slide. Okay. So in this slide, we will be discussing the point number C. We will be discussing the cross-border transportation services. Cross-border transportation is undertaken outside UAE. Goods not to touch the UAE port. For example, the goods are exported from outside UAE and delivered to outside UAE. And the example we have here, there is a taxable person, one company inside UAE. We have a contract with 5 forwarders here also inside UAE to move goods from USA to KSA. So regarding this one, it's international transportation, but as we discussed, we have to look into also the place of supply for transportation. It's where the trade begins. So for this example, because the trade begins in USA and actually it's ending also in KSA, so it's not touching UAE land. Therefore, these supplies should be out of scope. And to ensure the compliance and flexibility of this agreement, we would advise supplier of this service to maintain the contract of service. Export documents are issued by, actually it should not be issued by local emirate because it didn't come to UAE. So you just need to maintain the export document which is issued like from USA and also the import document which is received in KSA. This is to ensure the place of supply that the trade started in USA and ended in KSA. And also like related documents like custom declaration and bill of lading or airway bill, which also will be very important. Moving to the next slide. Okay, so in this topic, we will talk about courier services. So I will just leave it for now. Nikita will take it from here. And inshallah, we'll meet into the session for Q&A.
Thank you, Mr. Josefa, for such a wonderful explanation regarding the transportation services of the goods and the passengers. So going forward, we are going with the courier services. So we all know what a courier services is, where we have an express service to pick the goods from door to door or express delivery, so that it is ease and it gives a convenience for us. So there are 3 types of courier services now. That is, one is an international courier, one is a domestic, one is a cash on delivery service. So going forward with our slide, that is international courier services. So for international courier services, again, it includes the transportation, the delivery of the goods, the packages between the business B2B or B2C, depending how the transaction has been taken place. So
In this case, that is the international courier, again, that would be zero rated, depending again how exactly has been the services being taken place. But mainly in the industry, we have seen that there is a disbursement and reimbursement cases when this courier services happen. It does even happen when we are acting as an agent in during the imports of the goods and the imports of goods in the shipping agency, the shipping lines. So here in the disbursement case, it is like when an importer is, having assigns a task to courier agencies to collect the goods from the custom ports to the warehouse. That time it depends upon if that courier agent is acting as if the courier service, sorry, the courier agency is acting as an agent or it is acting as a principal. If it is acting as a principal, it will go as a reimbursement case, which will be again having a tax implications depending upon the transactions that has been conducted. But if it is acting as an agent, then definitely there will be no tax implication. To even getting a better view of what exactly a disbursement reimbursement case, we shall look into the coming slides where we have a proper example wise. So I think that time it would be much more convenient for us to understand what a disbursement and reimbursement case, because technically many people they have not understood this point of the law. And also while the charging or the disclosing, there have been many discrepancies that we have been facing during our review of documents. So now going forward with the slide, next slide please. Okay, so again, so in this, as I said, there will be good domestic and the cash on delivery services. So again, domestic depends upon the delivery of the packages of the goods within the UAE. So that will be taxable as per the standard rated. And the cash on delivery of services depends if you may, charge the fee as per the mutual agreement or it is paid on the cash. So again, if it is within the UAE, the taxability remains the same. It will not have any zero rated impact, obviously, because it is firstly conducted within the land of the UAE. So in both of the cases, the taxability impact would be standard rated itself. Going further. So as I said that we will be talking about the disbursement and reimbursement of agents. So just let us analyze and understand what exactly these terms are. So reimbursement refers to the recovery of the expenses that you incur as a principal. And disbursement, if you are recovering any payment made on behalf of the other person. So as we said in the previous, as I said in the previous slide, that disbursement of expenses is an out of scope and reimbursement expenses will be within the scope of the VAT. So first we'll understand what is a disbursement, what are the principles that actually act as for the disbursement. That is, the other party should be the recipient of the goods and services. Other party means the part for whom you're going to collect the goods or you're going to deliver the goods. So for that, the recipient of the goods should be that party. That party should be responsible for making the payment to the supplier. The party should have received an invoice tax invoice in its own name from the supplier. The other party should have authorized to make you, authorize you to make a payment on behalf of him. And the goods or the services paid should be clearly additional to the supplies you make for the other party. Like this should not be within the contractual. This is something you're going way, beyond your contractual services, just on the relationship basis, maybe, or just on the ease of basis, on the request basis that, okay, if you agree to it. Here I'm talking about as somebody like if we are going to be considering as disbursement for the other part. Okay. So the payment should be separately shown on the invoice and you should recover the exact amount that you have paid for that party. There should not be any markup. As we said, the disbursement is an out of scope. Since you are not directly related to the goods, the supply of goods, this goods are related, belongs to somebody else in its own name. And even the supplies be conducted by its name, only you'll be authorized to make a payment on behalf of it. This is very important. It's a key line. You are authorized to make a payment on behalf of the same. Then it's a disbursement. Okay, so now we have a very simple example, a general example, just to make it more simplify and make it understand that if you have a company A has procured a medical insurance from a local insurance company, okay, and it has received an invoice in the name of the company A itself from the insurance. But now it's saying this company B, just from my behalf, can you please do the payment? If the company B does the payment and the invoice and all is again named to the company A, that's the other party, then company B can only reimburse the amount that he has paid to the insurance company, not without adding any mark. Okay, so this is how exactly a disbursement case is been initiated. That is, first, everything has to be from other party apart from the payment that will be authorized. Only then that will be a disbursement case. Okay. Now going forward with the next slide, I will explain what exactly a reimbursement case looks like. So in the principles of reimbursement, you should have contracted this for the supply of goods or services in your own name and capacity. So here you see the biggest difference is in disbursement, you're doing it for somebody else who owns the goods are owned by the other party. But here in reimbursement, the goods are all or services are belonging to your name in your own self capacity. Okay. You should have received the goods or services from the supplier. The supplier should have issued the tax invoice in your name, and you have the under the legal obligation to make the payment for it. You are supposed to do the payment for it, and also in case of goods, you should own the goods prior to making an onward supply to other party. So now here the example states that if a company A enters a company contract with the company B to provide marketing services, now the contractual obligation, it states that company A is eligible to reimburse the expenses from company B. Okay. And if A incurs the expenses own name, it should be recovered from company B as per the terms of the contract. So when the recovery of expenses of company B will state, it will be treated as at a main act of a supply. There, the taxability can you can add the markup in that because of the services of considering you have reimbursed the expenses for them on their behalf, then you can add a markup to it. That is reimbursement. So the two main differences in the disbursement and reimbursement is in disbursement, just to summarize it, that disbursement refers to the goods which is belonging to other party, and reimbursement, here your goods are belonging to in your name and your own self capacity. Second, in disbursement, whenever you're providing the service, it's way out of the contractual obligation, which means it is not necessary for you to make it. You're not contractually obliged for it. Here, you're contractually obliged in reimbursement. You're contractually obliged that yes, this expenses I will, incur on behalf of you, and then you will have to reimburse me. Okay, so that's how disbursement reimbursement case takes place. This is usually very commonly seen between the shipping agencies when you act as an agent, and during courier services also, when there is this middleman thing which happens when they're responsible for you to collect or deliver the goods. So that time the transactions has to be stated accordingly, either it should be taxable or out of scope, because non-disclosure, in all my webinars I've been saying that the wrong disclosure, though it will if it's a taxable cases, it will attract negative attention from FTA. Also, it can cause you penalties because you have to revise your returns. So you have to be very, very careful while disclosing a transaction in your VAT return. Okay. So now going forward with the slide. Next slide, please. Is exit certificate. Okay, so time and again, we have been, those people who have been kind of regular to the webinars, or they know that exit certificate is something we have been promoting. That's quite important. And those who are new, exit certificate, first of all, is an official document that you receive from the customs port. It is for the inspection of the goods before they leave the port of this UAE country. Okay, and they are officially the document that states that it's an export, like the goods are leaving your the UAE land. So definitely that is going outside the country. That is the main evidence for it. So in this exit certificate is very important right away, because now for all the refunds, for all the audit assessments and everything, the FTA has been being mandatory about in this case, considering we are today talking about the international transportation of goods. In that case, yes, this is a very important document without which it is not recommendable to move forward. Also, if you do so, then the consequences are that they may ask you to get a reversal of those transactions where you have taken it as an export but you don't have an exit certificate, or else there is a long way of battle with litigation or a private clarification and so on and so forth to in order to prove that it's an export. So again and again, we have been saying that please, whenever you do a transaction, considering in the shipping industries, in the transporting, wherever there is an export of goods, please have an exit certificate. Do demand it, even if it is going through by air or through sea. Please do request for an exit certificate. Okay. So now we can just see the some potential consequences we have that if you don't have an exit certificate. This is in the point of view of if the goods are coming from the customs ports, then what exactly it would be. One, there will be delay in departure because the port authorities may refuse to allow the ship or goods to leave the port until all necessary documents have been met and the exit certificate has been obtained. In some of the cases, yes, the customs officers are very strict, but in depending on what kind of containers you are dealing with. But again, as a taxpayer, please have this as a practice that you must obtain an exit certificate, even though if it is necessary or not, irrespective of the value of the goods, because even we have seen that if it's a small value of goods, you tend to um, just ignore it. Like, no, it's like you have to pay for the customs as well, for the inspection of the certificate as well. So, but again, please do have this practice of having it. Second is fines and penalties. That is, companies may fined or penalized for non-compliance, including failure to obtain the required documents or violating any regulations or standards. There could be a legal action that in case if you are non-complying to the having this exit certificate, there could be legal action, including civil or criminal, loss of reputation because you're non-complying to the rules. Obviously, that could be that kind of a repercussion. Then risk of seizure in case if it's a very quite sensitive products that you are being shipping. Then if you do not have it, it could be their potential. We don't say that they will have, but one of the potential reasons we have been noted down for you for the exit certificate. Going forward with the slide, please. Now, warehousing services. Now, this has been one of the most topic, or you could say the most inquired about warehousing services. So what does that, let's just explain what a warehouse service mean. Warehouse service mean that is a centrally located place where you can come, you can, load your goods, you can store your goods. If you don't have that kind of an infrastructure with your company, you can outsource this kind of a service to some third party. So to store your goods and then to load and import, transfer the goods from the port or the customs and however it is. So that is a warehousing service. Okay. So this kind has been delivered, just to read around that before being delivered to clients, quantities are warehoused and stored as a part of inventory management. It also helps to track business track, securely store the inventory, control software, moving, etc. Okay. So usually we have seen that to take advantage of the incentives of in the UAE law, many of the warehouses are located in the designated zones. Okay, designated free zone. So most of the warehouses are located in there. One of the examples of designated free zone, if I can give you, it's JAFZA. Okay, one of it. There are many, but one of it, which everybody can relate to. Now, what are the tax implications when you have your goods stored in a warehousing services, or when you as a warehouser are kind of supplying the source of supplying such kind of a services? So if the for designated zone, it can be treated as for out purpose, like an out of scope. Again, with different goods, types of goods. We cannot generalize all goods as same. So if it is different types of goods, then again, it will depend how exactly the tax implication will come. So if it is in designated zone, it could be out of scope. Compared to the services, if you have a warehouse in mainland, definitely that is taxable. But if designated zone, since they are a fenced free zone, so definitely that is why it has been giving a special privileges and a special reference. Secondly is warehousing services provided to customer within UAE are taxable, as I said, but those provided to customers outside the UAE may be zero rated. Exports depending upon the movable assets interpretation. Now, this is actually written in the law about movable assets interpretation. We do not have exactly how to, in a legal way or in a in a lawfully term, how exactly to explain it. But it could be, as per our assumption, that it could be related to your own movable assets. Then it can again be considered as a zero rated. Then temporary storage for transportation purposes may be regarded as a transport rated services and zero rated for international transportation if proper documentation is maintained. So if your goods are being only stored for just for the international transportation, they have been loaded from the dock, only stored for some time, only for the purpose. Again, it is going to move out. Definitely, then in that only on that lines, it could be considered as zero rated. Then value-added services like packing, repairing, labeling may be taxable for UAE-based customers, but possibly zero-rated for customers located outside UAE, again, depending on the movable assets interpretation. Consolidation of cargo for transportation purpose may be considered for transport-related services and potentially zero-rated is supported by appropriate documentation for international transportation. Okay, so that was for regarding the warehousing services. Moving forward. Now, transportation and services related to the passengers. So again, this depends upon the local transportation. Like Mr. Josefa very well said in the very first slide of the this, that transportation of local supply of local transport passenger transport service is in a qualifying means of transport is an exempt. Qualifying means of transport, that is any like the ship, the bus, the car, which is used for only transportation of passengers, local passengers, not private, then definitely it will come under a local transportation. And local means again within UAE you have to move from one place to another, then that is again domestic. So again, that is an exempt. And in the same case, if you consider it as a private, like a limousine car or any kind of a pickup and drop service that you have, now again, those are also passengers, but those are not dedicatedly for the local transport passengers. Here, local transport means your RTA buses from the metro station, your metro trains. So these are all local transport passengers. When you have something very specific to the pickup and drop in service, those are not local. They are privately owned or privately hired service. Definitely that will have a taxable, they will not be exempt. Okay, so that was for local transportation. This was related to passengers. Going forward with the slide, please. Next slide, please. Okay, so coming to the point of documentation. Now, documentation in the VAT is the key to prove how exactly your disclosure or your transactions you're considering. Okay, now, like I've been saying that for international transportation, as Mr. Josefa said in the previous slides, what kind of documents you must be keeping. We spoke about exit certificate that proves that if the goods are moving outside the country, that exit certificate is an important document in order to prove that the goods are export. Now, so when you say any supply of services, services provided during the international transportation, like considering your maintenance of the ship and all, if the ship is in transit, and that time you're providing such kind of a services, yes, it is a zero rated. Again, documentation is required to prove that, okay, when you provide such kind of a service, when that vehicle is in that international transportation pursuit, like it's not come and it's parked in your dock, but it is in the moving transit, that time it is an international transportation. Again, you are responsible for, collecting such kind of a documentation. Why international transportation of goods, that is Article 45, is so much being stressed or emphasized is because it was also said by Mr. Joseph also that the domestic part or in the international transportation can be not considered a part of an international. It is a domestic leg, so it has to be standard rated. Why? Because these are all related documentation. So you need to have those kind of a sets of documentation in order to prove it. If you are not a particular the agent or the person who's responsible for transportation of goods from A to B, that is from country Israel to country Iraq, okay, then you require somebody to halt in Dubai and you require transportation service then. So those transporters who are helping this agencies then only support the domestic leg. So that is again taxable. But I have even seen that there are many customers who do claim that no, we are international, definitely we will not charge. If we charge, we lose our customers. We totally agree on those points. But again, you must realize something, that in case if you go for refunds, if you go for, and if there is an audit assessments on you, such kind of transactions that you're undertaking, if you don't have necessary documents to prove so that you are a part of it, then they will not be a zero rate, it'll be 5%. Okay, so sooner or later you will have, everybody has to adopt to this kind of transaction, disclosure transaction, and even applicability of issuing of the invoices as per the tax rates. So yes, we can just bring awareness. Again, it is said that FT has already taken in the previously also such kind of an actions where if your transactions are not proving to international transportation, they have been charging you and they're asking the companies to make it a 5% thing. Okay, so definitely it's time and to take a proper practice of maintaining all the documents set very well, so as you don't fall on a negative attention from FTA and you don't have that condition where you are liable for any fines or penalties and so on and so forth from it. Okay, so as we see, what are the benefits of it is, first, documentation is an integral part of the organization because they act as an evidence. Proper maintenance of it helps as a good reference for the future related or the past transactions. Penalties, again, if there are any, it could be avoided if you have a good set of documentation. Okay, so going forward with the next slide. Then these are few case studies so as to again help again in international or in the domestic, in the transport of passenger or services. Just to go ahead and summarize it, that in case, like I said, for the local transportation, now Kareem is also a means of transport, is a car to passenger supply, like it is giving that service that to drop the passenger from place A to B. So as per the UAE law, supply of transportation of passenger is exempt, so therefore no tax can be charged. But the service fee provided by the Kareem, because Kareem is a privately owned company, it's not a government local body, so definitely there would be a taxable on the services provided to Kareem. That is why you receive a tax inclusive fare always if you see in the Kareem. Secondly, again, if the Dubai bus that we see, the double-decker bus that we see for the sightseeing purposes, so that is again a passenger transport, but it is used only for the entertainment purposes. So it would be a taxable supply, not an exempt. And even, as I said, the limousine car for birthday or the party celebration that we use, that is again a privately hired service. It's not something government-owned service, very dedicated for the supply for the transport passenger transport service. So that would be again a taxable service, not an exempt. Going forward, hospitality, again, like in the hotels also, if you might have seen that the hotels do arrange the pickup and drop service for the guest. they do give this complimentary services where they will pick you up from airport, they will drop you off at the hotel, or they'll pick you up from hotel and drop at the airport. Or if you want to go for any sightseeing, they shall issue you this kind of hotels, cars and all. Again, though passengers, but not coming under that plight of local transportation of passengers, thus not exempt. And also hiring of such cars and leasing of it is again a private based service that is going to be subject to 5%. So coming back to the slide, this has been like completely summarizing you of whatever we saw of the inbound, outbound, courier to the documentation part, what exactly a local, what exactly international transportation look like, what kind of services come under pursuit of the same. Hope we have been able to cover all such points, and hope we have been able to underline all the queries, though this topic is very, very vast, very broad. So in case if you have something, definitely you'll see in the Q&A, but if you feel connect to us, definitely we can even have one-to-one talk basis to even cover your concerns and queries. The only last part is about the health check. So now how do we identify exactly what kind of a concern your company is having, what kind of documents you are not having? FTA is under the now since 2018 has been from 2023, it's a 5-year implementation of VAT has been completed. So now if definitely every year FTA audit will start, because 18 is for this year, 2023 definitely will be last. So before that, you may or may not have received audit notifications yet. If you have not received, congratulations. If you have received, then yes, we are here to help you. We can offer you health check services, that VAT pre-audit health check. That is, first is a very comprehensive one, and the second, which we have implemented depending upon the size of the company or on the request of the customers. This is a preliminary health check. Here it's the same what we do for as a comprehensive, but it is a little bit a shortcut, or you could say a saving in time, this kind of a health check, where it really is a quicker process. The price is less as compared to a comprehensive one. We identify the discrepancies or challenges faced by the organization. We provide you advisory services, and as a health check, what we do is we review the VAT reconciliation, we review your financials like a TV, as good as what has been performed by in an FTA audit. We simply replicate the same thing. Okay, the only thing that it is quicker, simpler, faster. Those who only just want to look at what differences they have, those who only want to know, okay, what exactly the do's and don'ts in the organization, this is a perfect package for you. So if you ever feel like wish to know more about the services, do feel to contact us. And with this, we finish the webinar about the international transportation of goods and services. We shall take in the Q&A. I would request Mr. Josefa to come in so as to help us to answer the queries.
Thank you, Nikita, for the informative session. Thank you, everyone, for keep watching us until now. I think it's been 1 hour and 3 minutes now. So we'll be taking Q&A quickly. We'll not take more time from you. And so we can start with this question. Do we charge 5% VAT for shipping, repair, and maintenance? We are a service company. So if I understand this correctly, I think you mean about repair and maintenance for ship, right? For vessels. So as per Article 35, the service which are supplied directly in connection with means of transportation, referred in Article 34. And in Article 34, this is about vessels and boats as well, which is designated for commercial purposes. So in this case, your service will be zero rated. If I didn't understand your question correctly, please let me know. Another question we have, does the disbursement applicable in case of normal air, ocean, or transport, or only in the case of courier? Actually, disbursement rules is applicable in many cases, not only even in the logistics sector, it can be also applicable in other cases. The most important that you need to assess your transaction, you need to look to the 6 conditions which was published by FTA in the public clarification regarding the disbursement. Like your customer should be the beneficiary of the service, the invoice should be issued under your customer name, your customer should be in charge of the payment and ask you to make the payment on his behalf. You have to charge him the same amount without profit margin, and definitely this should be combined with service you are providing to him. So if those conditions are met, definitely you can consider your transaction disbursement, regardless your sector. But in case it's not met, then it should be taxable, and you need to check the tax treatment for it. Other question we have, we are an importer and have agent to assist to clear containers from port and delivery to our yard. The agent has expenses like container cleaning charges by third party, which has tax invoice with VAT. The agent will invoice us, including the cleaning charges as per the invoice. As an importer, can we claim the VAT on the cleaning charge VAT as our input VAT? So the criteria to claim the input VAT is this expense should be for business purposes. You should have a tax invoice, correct tax invoice, should have paid or have the intention to pay it. So if these criteria are met, you can definitely claim the VAT input. Other question we have. So we are a freight broker where we connect the importer-exporter with freight forwarders. We pay to freight forwarder and bill same amount to importer-exporter. These can be shipments by air, ocean, road, or even courier. Can this be treated as disbursement? As I mentioned earlier, it can be disbursement as long as it meets the 6 criteria we have mentioned. If you want to have a specific assessment for your transactions, I would invite you to have a meeting with our team experts, and then we can discuss your transactions along with documentation to assess if you can make it out of scope as a disbursement or it should be taxable. So next question, please let me know about the buses transport in Abu Dhabi. We are taxable or not? Okay, so here we have to differentiate between the supply of means of transportation and services directly connected with it, and the supply of transportation services. So the supply of means of transportation for bus, it can be zero rated if it's used for public transportation. But for buses which is used for private transportation, the supply of the bus and the service for it, it cannot be zero rated. But if your question about the supply of transportation services, so if it's considered local passenger transportation, it can be exempted. Other than this, it will be 5%. Okay. One question, is it compulsory to apply for VAT refund? It's not compulsory, but I believe if you have credit balance with Federal Tax Authority and you are not asking for refund, this might raise a question later and they might come for audit to review your books of accounts, but there is no mandate to apply for refund as per law. Next question we have, I have a passenger transport and I have not registered in VAT. As we discussed, it's exempted, but my client asked for VAT number. What should I do? So if you local passenger transportation, which is exempted, so you are not required to go for VAT registration. And if your client is asking for your TRN and they cannot understand the nature of your business, so there is the option to apply for like a certificate from FTA. Mentioned there that you are not eligible for registration. This service is available with Federal Tax Authority. You can apply for it. So you can use this certificate with your clients to like prove to them that you are not eligible for registration and you cannot provide them with TRN certificate. Last question. So we arrange air charter flights. We don't own aircrafts. We only arrange aircrafts. 5% VAT applicable on such service. So here it depends. So like if your service is like brokerage, or is it your service that you are like arranging the charter flights, like you are renting the whole flight and then like like subleasing it. It depends. So your service can be 5%, it can be zero rated, but it's based on the documentation you have and based on more details. So I believe it will be better if we have a meeting so we can discuss further about your questions. That's it for today. I apologize for people who sent the questions and we couldn't answer for now. We will be answering this later. We will be sending you the answer for your queries. Thank you so much for attending today's webinar. Thank you, Nikita, for the informative session. Thank you, everyone. And hopefully we will see you soon in more webinars. Thank you.
Thank you, Mr. Huzafa, for answering the questions. And thank you, everyone, for attending the webinar. We are really grateful for that. Looking forward for you all to attend our next webinars very soon. Thank you.